So friends, in today's session, we are going to do set off and carry forward of losses. We are going to complete this entire topic. Believe me or not, this entire topic we are going to complete. You will enjoy it. So please stay tuned till the end. Just checking whether we are live now. Yes, I think we are live now. Fantastic, fantastic. So let us start. Let us start. So what is this whole topic about? Set off and carry forward of losses. Let's try to understand in depth, whatever time it takes. Okay. But don't just invest time in writing. You can just take the screenshots. Okay. So set off and carry forward of loss in income tax means what? See, you can have loss now. When do you have loss? When particular expense is more than income, you have loss. For example, in HP, you can have loss. Yes. So, HP1, there is suppose loss of 2 lakh. And HP2, there is suppose income of 4 lakh. What happens? You set off that 2 lakh rupees loss against that 4 lakh rupees income. And then what is your net income from HP after that? It is 4 lakh minus 2 lakh, that is 2 lakh. Getting it? So that is called as intra head set off. Intra head set off means set off within same head. Okay. So see, example I have given you. Suppose house 1 there is a loss of 40,000 and house 2 there is an income of 3 lakh. Then what will be your income from house property? Your income from house property will be obviously 2,60,000. Agreed? Make sense? Yes. How did you get 2,60,000? 3 lakh minus 40,000. Yes. Wonderful. Wonderful. Then going ahead, after that intra head set off, so that way lot of heads will have different sources of income. Loss of one source can be set off against income of another source, that is called as intra head set off. So always as a SSC, I should try to do first intra head set off. But after intra head set off, if any loss is still pending, then what I will do? Inter head set off. Inter head set off means set off with income of another different head. Okay. Yes. Getting it, Pallavi ji? Yes, Priyanka ji? Yes. So first you will do intra head, then you will do inter head. I will show you example of inter head. Suppose there is a business loss of 50,000 rupees. Business loss of how much? 50,000 rupees, and there is a long term capital gain of 3 lakh rupees. So now they are off to different heads. So loss of business head can be set off against capital gains. This is called as inter head set off. So in my example, there was a PGPP of 50,000 and there was a long term capital gain of 3 lakh. Eventually, your gross total income will be 2,50,000. Do you all agree? Absolutely, sir. Then, suppose there is a PGBP of 1 lakh and there is a PGBP loss. In bracket means it indicates loss. Loss of 1 lakh and HP income of 70,000. Then your gross total income will be 0. Do you agree? Your gross total income will be 0. So why it will be 0? Because that PGBP loss of 70,000 will be set off against HP income of 70,000. So your gross total income will be 0. In fact, there is an extra loss of 30,000. That extra loss of 30,000 will be carried forward to next year. In next year, you can set it off. So what is the sequence, friends? Tell me what is the sequence. First, you will try to set off loss of one source against income of another source within the same head. That is called as intra-head. Do you agree? After intra-head, if there is still loss, you will try to set off with income from another head. That is called as inter-head. If after doing inter-head, there is still any loss remaining, then you will carry it forward. Clear? Understood? Shall we go ahead? Now, one interesting thing is intra-head is possible, inter-head is possible. Okay, but there are restrictions. Yes, there are restrictions. Okay, what are the restrictions in intra-head? In intra-head, how many restrictions are there? There are 4 restrictions. Yes, there are 4 restrictions in intra-head. I hope all of you have liked the video and hit the bell icon and subscribe to the channel so that you don't miss out on any such important videos. Okay, we keep on discussing many concepts of income tax and GST on this channel. So, 1. Loss from specified business. There is one specified business, okay, of section 35 AD, which is a special type of business. Loss of that specified type of business can be set off only against income from specified business. Secondly, loss from speculative business. Which business? Loss from speculative business can be set off only against income from speculative business. So how is this restriction? Means, listen to me carefully. Specified business loss cannot be set off against normal business income. Same way, speculative business loss cannot be set off against normal business income. Hence, we are calling it as restriction. Getting my point? Why we are calling it as restriction? Then friends, long-term capital loss. Which loss? Long-term capital loss. That can be set off only and only against long-term capital gain. Again, long-term capital loss can be set off only against long-term capital gains. Make sense? Yes. So in short, long-term capital loss cannot be set off against short-term capital gain. That's why we are calling it as restriction. And lastly, there is a loss on owning and maintaining race horses. That loss can be set off only against income from owning and maintaining race horses. We are not talking about winning from horse races. We are talking about your owning and maintaining race horses. Loss from that can be set off only against income from such activity. So all of you tell me in the chat window how many restrictions are there in intra-head set off. So in intra-head set off, there are 4 restrictions. Now, in inter-head set off, also there are restrictions. See, in income tax, nothing can happen without any conditions and restrictions. So in inter-head, there are 3 more restrictions. Why I'm saying 3 more restrictions? See, restrictions in intra-head is automatically restriction in inter-head. Are you getting my point? Restriction in intra-head is automatically restriction in inter-head. Because if loss from specified business can be set off only against income from specified business, that means it cannot be set off against HP. It cannot be set off against capital gains. Are you getting my point? It cannot be set off against IFOS. Yes, sir. Absolutely. Got it. So those 4 restrictions continue. Plus there are new, how many restrictions? There are new 3 restrictions. Business loss is there, na, that cannot be set off against salaries. Yes, business loss cannot be set off against income from salaries. Otherwise, what will happen? Every salaried person will start business and will show expenses in business and say that there is loss in business, allow it to be set off against salaries so that my taxable income goes down. But that is not allowed. Then the HP loss. HP loss is there, HP loss that can be set off against other heads of income. But very important, only if SSC is out of 115 BAC. Interhead set off of HP loss will be allowed against other heads of income only if SSC is out of 115 BAC. And when it will be allowed only to the extent of rupees 2 lakhs. So I want all of you to put this limit in the chat window. What is the limit of setting off of HP loss against other heads of income? Limit is rupees 2 lakh per annum. Did you all get it, friends? And finally, short-term capital loss can be set off either against long-term capital gains or short-term capital gains. In short, short-term capital loss cannot be set off against HP, PGBP, IFOS salaries. Chalo, I want all of you to write in the chat window what is the limit for set off of HP loss against other heads of income. What is the monetary limit? Monetary limit is rupees 2 lakhs. And it can be set off only when you are out of section 115 BAC. Is it clear to all of you till this point? Yes or no? If yes, we are going to solve one question on this. Okay, we will solve one question on this and then I will tell you details of carry forward. Okay. Yes. Priyank ji, Akhan, Pallavi, is it clear to all of you? Shall we go ahead? See one question, friends. See one question. Question is, compute total income of Mrs. Krutika, whose age is 45, for AY 26-27 from the following info. Income from salaries is 10 lakh. Very good. And it is already computed. Already computed means what? After taking deduction of that 16(1)(a), that is standard deduction. So no need to take standard deduction. Your final calculated income is 10 lakhs. Loss from HP1 and HP2. See here, there is a loss from HP1 also and there is a loss from HP2 also. So what's the total of losses? 250 plus 320. 570 is total loss from HP. Okay, now of course you can set it off against this 270. So 570 you set off against 270. Still there is a loss remaining. How much loss is still remaining? There is still loss of 3 lakh that is remaining. Can we set off this entire 3 lakh against other heads of income? First of all, to set off HP loss against other heads of income, you should be out of 115 BAC. Check. What is given here? SSC is paying tax by opting to shift out of 115 BAC. Make sense? So yes, you can set off HP loss against other heads of income. But to what extent? It can be set off against this 10 lakh, but only to the extent of rupees 2 lakhs. So that way, your income from salary will be 8 lakh rupees. Why 8 lakh rupees? HP loss of 2 lakh will get set off against that 10 lakhs. So far, so good? Yes. Then HP loss of 1 lakh is there, na? Remaining. That will be carried forward. Then you have profit from speculative business. But there's a loss also of speculative business. You know, loss of speculative business can be set off against this profit of speculative business. So your overall income from speculative business will become zero. And this 1 lakh loss of speculative business will be carried forward. Then friends, there is a loss from normal business, 125. Let's see what to do with that. There is a STCG, means short term capital gain of 14 lakh, long term capital gain of 18 lakh. You know, long term capital loss is there of 20 lakhs. This can be set off against long term capital gain. Long term capital loss of 20 lakhs will be set off against long term capital gain of 18 lakhs. After that, long term capital loss remaining will be 2 lakh. Can't do anything with that. You will have to carry it forward. You know, long term capital loss cannot be set off against short term capital gains. Long term capital loss can be set off only against long term capital gains. Make sense? So, STCG still remaining is 14 lakhs. But you know, there is a normal business loss. That normal business loss can be set off against STCG. So take on your calci 14 lakh minus 1 lakh 25,000. Your taxable STCG will be 12 lakh 75,000. Okay. Winning from horse races is always fully taxable, 1 lakh. Loss from gambling will not have any effect. Interest on FD will be fully taxable. Interest on savings bank will be fully taxable. Dividend from domestic company will be fully taxable. That's it. Take the total now. Take the total that I have been writing here of taxable figures. You will get GTI. So what is your GTI? Take on your calci 8 lakh salary income, 12 lakh 75,000 short term capital gain, 1 lakh winning from lottery, 1 lakh 50,000 interest on FD, 12,000 interest on savings bank, and dividend from domestic company 25,000. You must be getting GTI of 23 lakh 62,000. Do you agree? Yes, sir. We got GTI of 23 lakh 62,000. Now don't forget interest on savings bank account. You will get deduction under 80 TTA. Your age is 45 and you are out of 115 BAC. So you will get deduction of rupees 10,000. So 23 lakh 62,000 minus 10,000. Final answer will be 23 lakh 52,000. Did you all understand, friends, how to go ahead with set off and carry forward of losses. May I go ahead and show the detailed working to you of calculating and getting answer formally of 23 lakh 52,000? Yes, no? So give the heading computation. Solve this along with me. Computation of total income of Miss K for assessment year 26-27, which is relevant to PY 25-26. Very good, Pallavi. Very good, Priyank. Yes. So who else is following the session very meticulously, very systematically? Let me know in the chat window. So computation of total income of Miss K for AY 26-27, PY 25-26, where she is paying tax, by opting to shift out of section 115 BAC. Do you agree with me? This heading is clear to all of you? Go ahead. Particulars and make 3 amount columns. Amount, amount, amount. All figures in rupees. Just remember one thing, only the final taxable figures will go in the third amount column. If you follow that much, you are going to get correct answer. So you know income from salary. Income from salary that we are going to finally tax is 8 lakh rupees. How did you get that 8 lakh rupees? We'll just show that. So A point, start with income from salaries. So this income from salaries, take the amount here 10 lakh. So actually it is 10 lakh less loss from HP, less loss from house property, set off. So loss we are setting off is 2 lakh, and that's why taxable figure is 8 lakhs. Make sense? After salaries, you have got income from house property. In income from house property, what do you have? You have, first write the income that you have. Income from HP3, 2,70,000. HP3, house property 3, income. So you know HP3's income is how much? 2,70,000. Okay, so you write it here. 2,70,000. Okay, but less losses from HP. Which HP? Losses from HP1 and HP2. Okay, so HP1 loss is how much? HP1 loss was 250 and HP2 loss was 320. So 250 and 320. HP1, HP2. How much? 250 and 320. So right there, 250 in first column and 320. But we did not need all of this. We needed only to extent of rupees 2,70,000 we needed. So actually total was actually 570, but we needed only to the extent of 270. So we have taken only 270. We have done 270 minus 270, and in third column our income from house property is 0. Okay, shall we go ahead? We'll write a note afterwards. Then go for C point. Salary done, HP done. Go for profits and gains from business or profession. In that, start with profit from speculative business A, 13 lakhs. Profit from speculative business A. So that is 13 lakhs. Take it in second column. Less loss from another speculative business. So actually it is 14 lakhs, but we don't need 14 lakhs. We need only 13 lakhs. So this will become 0. Did you get it? And there is no other business income. Then after that, loss from normal business, so you will set off. Go ahead and write down capital gains. See, first head is salary, after salary HP, after HP PGBP. Now write down D point, capital gains. Tell me when all of you are on capital gains. In capital gains, we'll go ahead and write short term capital gains. Now what is your short term capital gains? 14 lakh rupees. So right there 14 lakhs. But one interesting thing is happening. Less you have got business loss. Business loss you can set off. So business loss being set off. So that is 1,25,000. Isn't it? 1,25,000. Yes. So you will get 12,75,000 as your STCG. Yes. So check. Did you get? Yes. 1275 is your STCG. Short term capital gain. You have long term capital gains also, which is 18 lakhs. But friends, you have less long term capital loss, which will be set off, which you are setting off against that gain. That is of 20 lakhs, but you need only 18 lakhs. Set it off, you will get 0. So finally, taxable capital gain in the third column is 12,75,000. So salary done, HP done, PGBP done, capital gains done. Go ahead, write down E point, income from other sources. Are you all with me on income from other sources? In this, see, all your other losses are over now. There is nothing available for setting off. So now just you have to tax the income from other sources. Winning from horse races 1 lakh. Winning from horse races Take 1 lakh in second column. Go ahead. After that, what you have? Loss from gambling, we will write a note that it will not have any effect. Interest on FD, 150. So write interest on FD in second amount column, 150. Next, interest on savings bank, 12,000. Interest on savings bank account is, friends, 12,000. And then what do you have? You have dividend from domestic company, which is 25,000. Dividend from domestic company, which is 25,000. Now take the total. This will be your income from other sources. Are you getting income from other sources as 2,87,000? Can you take total of 287 plus 1275 plus 8 lakhs? Are you getting 23,62,000? So friends, 23,62,000 will be called as gross total income. What it will be called as? It will be called as gross total income less deductions under chapter 6A. Go for deductions under chapter 6A. 80 TTA, which was interest on what? Savings bank. So how much that is allowed? That is allowed to the extent of actual, which is 12,000, or ceiling limit of 10,000, whichever is lower. So you are getting deduction of how much? You are getting deduction of 10,000. So friends, what is your final PGBP? Final total income. So therefore, your total income is 23,52,000. Did you all get 23,52,000? Let me know once, all of you, in the chat window. Then friends, go ahead and write notes. What all will you carry forward? For how much time you will carry forward? Write notes for that. Notes. Losses to be carried forward. See, to be carried forward means in next years you will use them. In this year, that losses couldn't be set off, so they are getting carried forward. So which are the losses to be carried forward? Number one, check. We have decided what losses to carry forward. HP loss of rupees 1 lakh. How 1 lakh? I will tell you. Okay. HP loss of rupees 1 lakh. How 1 lakh? I will tell you. See, overall loss was, do you agree? Overall loss was 5,70,000. From 570, you used out of 570 for HP income, you used 270. Still remaining was 3 lakhs. You used against salary 2 lakhs. Clear? So that's why remaining is 1 lakh. Make sense? HP loss remaining is 1 lakh. That will be carried forward. After HP loss, second, which else loss will be carried forward? Loss from speculative business of 1 lakh. How 1 lakh? Profit from speculative business was 13 lakhs. You have set off loss from speculative business against that of 13 lakhs. 1 lakh was remaining. So that, okay, loss from speculative business. How much? That is also of rupees 1 lakh. Very good. That is also of rupees 1 lakh. How 1 lakh? Show the working. Overall loss was 14 lakhs less. So overall loss was 14 lakhs less set off up to 13 lakhs. So that remaining was 1 lakh. Clear? Next. Next is our LTCL, 2 lakh rupees. That's the last one that we are going to carry forward. LTCL of how much? 2 lakh rupees. Long-term capital loss of 2 lakhs. Why 2 lakhs? Any idea? Yes, because overall loss was 20 lakhs. Out of 20 lakhs, you have utilized 2 lakhs. So remaining is, sorry, you have used how much? 18 lakhs. So remaining is 2 lakhs. Clear? And then one more thing you should write. If this was your first note, losses to be carried forward, then there will be second note. Second note will be for what? Loss from gambling shall neither be set off nor carry forward. Nothing will happen nor carry forward. Okay, it has no impact in income tax. It has no impact in income tax. Why? It has no impact under income tax. Why? As income from gambling is taxable without any deductions. There are no deductions only for taxing income from gambling. Is it, friends, clear to all of you? Okay, so now I'm also going to tell you that these losses which are carried forward, some speciality about those losses. Okay, so see, carry forward of losses. Whatever losses you are carry forwarding, see some speciality about that. Okay, usually now in next year, see, you have carried forward HP loss in our example. That HP loss in future can be set off only against HP income. So usually carried forward loss can be set off only against same head of income in subsequent year. Getting this year's business loss, if we are carry forwarding, next year it can be set off only against business income. In short, what I'm telling you is interhead set off is not possible of the carried forward losses. Clear? Exception is unabsorbed depreciation. That unabsorbed depreciation can be set off against any head of income in future. Of course, except salaries. Further, if you want to carry forward loss, that is possible only if income tax return is filed within due date of 139(1). Means if you want to carry forward losses, you have to do good tax management. Means you have to do proper compliance. You have to file income tax return within due date of 139(1). Then only it is possible to carry forward loss. But exception is there for HP loss and unabsorbed depreciation. You can carry it forward even if you have not filed ITR within due date. And now comes one critical point, that whatever losses you have carried forward, for what time span they can be carried forward. Meaning to say, after this span is over, these losses will not have any validity. They will expire. Okay, you have to assume as if this loss had never happened. For example, in you had HP loss now. That HP loss can be carried forward only for 8 years. After 8 years, that loss will lapse. Lapse means it will be like invalid, null and void, no effect. Then STCG, LTCG, normal business loss, these all can be carried forward for how many years? Once write in the chat window. They can be carried forward for 8 years. Then speculative loss, loss from speculative business, it can be carried forward for 4 years. And then loss from owning and maintaining racehorses, these two can be carried forward for 4 years. And lastly, unabsorbed depreciation and loss of specified business, they can be carried forward for unlimited number of years. Clear? So in our example, there was this HP loss. This HP loss can be carried forward for next 8 years. Do you agree? Speculative business loss is there of 1 lakh. This can be carried forward for next how many years? It can be carried forward for next 4 years. And long-term capital loss, it can be carried forward for next how many years? 8 years. Okay, so friends, I hope you all have understood this session well. Yes or no? Of course, in coming sessions, we will solve more and more questions on set off and carry forward of losses. Okay, thank you so much. See you in the next session. Till then, keep smiling, keep studying, stay blessed. Do subscribe to the channel and hit the bell icon so that you don't miss out on any such important videos. Don't forget to like the video and share it with your friends, okay, who might find this useful. If you want, we can write notes also on this. Do you want further notes on this? Salary story is clear. From 10 lakh you took HP loss. Now, other notes if you want, we can write them so that in future you will not face problem. See, HP loss is set off against other heads of income, that is in this case salaries, as assessee is opting to pay tax by shifting out of section 115 BAC. Full stop. Continue. Further, how much was the restriction? Further, there is restriction of rupees 2 lakhs for HP loss set off against other heads of income. Clear? This note is absolutely clear now? Yes. Because I don't want any one of you to struggle afterwards unnecessarily. So this is absolutely clear now, that why we set off only to the extent of 2 lakhs. Then otherwise this too is clear now. PGBP, loss from speculative business, can be set off only against income from speculative business. That is so clear. Loss from speculative business can be set off only against income from speculative business. Isn't it? Fifth note. So this speculative is also clear now. CG is clear, that LTCL can be set off only against LTCG. Yes. Long-term capital loss can be set off only against long-term capital gains. Clear, friends? So that's it in today's session. See you in next session for further practice of one more sums of set off and carry forward of losses. Till then, keep smiling, keep studying, stay